88th edition of the Trading Opportunities webinar. This is your host Nirav, and give me a few moments while I check the technicalities at my end before actually beginning with the actual webinar content. Those of you who are live in the webinar either on LinkedIn or on YouTube, if you can let me know in the comments if everything is working. At least at my end, looks like the audio is working, right? So with that, let's now first quickly go over a few things here. Where's that screen share? Yeah, that's working. So before I begin with the webinar and introduction or anything at all, is the legal disclaimer. And it mentions basically that all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or any other activity, you yourselves will be liable for your profit, loss, or loss of profit. Rest of it, you can obviously read for yourselves. With the disclaimer out of the way, let's now begin with a very, very quick introduction about who I am, what is this trading opportunities webinar, what's the point of doing them, and what have we achieved so far in these webinars. So guys, my name is Nirav. I'm the admin and owner of 50eyes.com website, as well as the YouTube channel 50 Eyes Market Analysis, where this broadcast is currently being done live alongside the LinkedIn broadcast. These are both simultaneously running live. Right. And so far, we have been conducting these series of webinars called the Trading Opportunities webinars. What I do in these webinars is I discuss the charts of Euro USD, crude oil, gold, S&P 500, Nifty 50, and Bitcoin. And as we do them in live market, that is when the market is open and running, we also discuss possible trading opportunities, trade setups, and I also do take trades myself live every now and then. So far, we have done 87. This is the 88th, which we are currently broadcasting. We always do the webinars on Fridays at 7:30 p.m. IST or 2 p.m. GMT. So just convert it to whatever time zone you are in. This is when we do the webinars, basically. Right. Apart, one more thing about the webinars. We have so far captured 155 trades in the 86 webinars, and I was just checking the last webinar before starting this broadcast, and it comes out all 5 trade setups discussed in the last webinar played out. So making our tally to 160 total trades captured within these, what do you call, 87 webinars, 160. Right, all of these trades are obviously discussed live in front of you guys in the YouTube as well as LinkedIn streams, and we'll also look at them when we go over the webinar. Right. Apart from all that, I'm also the author of the book. You can just check it on Amazon. It's a Kindle version, so you can just get it in electronic copy right away. And also, I've been doing this since a very, very long time, and I have kept a track record of everything that I do here. Since 2016, the videos and webinars that I've been doing, it will take a few moments to load. Yeah. So we have kept a track record. 2016, the accuracy was 83.34. 2017, it was 87.5. 2018 was 84.61. 2019 was 84.88. By the way, what this is really is the date, the instrument, the analysis of the instrument, and the link, and what really happened. Did we get that movement as expected or not as expected? Right. And at the end, the things that worked out are given +1, which did not work out are given -1. For instance, in this 2019, we had 86 total analysis, 13 of which did not play out, 73 played out, and it was an 84.88% accuracy. Right. So it's all publicly available here. Everybody can check it anytime. You can check it. And this is all forward tested. That is, I come and do the analysis live in front of you guys. Right. And I personally have not come across any track record which is forward tested and done in public eyes. Right. Just keep in mind, it's done in public eyes consecutively for 6+ years now. As you can see, 2018, 19, 20, 21, etc. Right. So this is by far industry leading. Generally, an accuracy of 60% is considered very high in this industry. I have 80% plus 6 consecutive years, and 2022, 2023, we started doing the weekly webinars, and we just kept a track record of the trades which worked out instead of keeping these big lengthy spreadsheets. I don't have the time for it. Right. So that's about it for the forecast accuracy. I recommend you guys check it in case you are serious about learning trading, making it a career, or anything at all in this field. Right. Lastly, with these webinars, as I said earlier, we'll go over the charts of euro, followed by crude, gold, and S&P Nifty, and in the end, we'll discuss the chart of Bitcoin. Right. And do keep in mind the trades which are discussed live here are overview of the or the part of the bigger analysis that I do. I do keep updating my analysis live trades as well in my private Slack group. In case you are interested, it's request only, so you will have to send me a request by visiting 50 contact us, and I'll get back to you on that. So that was about the introduction, and lengthy and boring, I know. But now let's get into the real stuff and the chart of Euro USD very quickly. Where is Euro? Euro. There it is. So the way we'll proceed is I'll just give you a very quick look at we'll get a very quick look at what we discussed the last time, and then we will see what's going on right now. Right, just to keep a consistent idea of how we do things, I'm just telling you. So once show, there it is, it's working. By the way, if you guys are live and able to hear me and watch me, that will be appreciated. That is saying yes or something like that in the comment section before we begin with the actual content, so that I know audio feed and everything is working fine at your end as well. I'm just checking on my device, and on my device it's working fine. But yeah, again, a confirmation from the actual audience is always better. Okay, so I can't wait for too long for this. So let's just now begin with the actual chart. And Sushil is saying all good, sir. Thank you, Sushil, for the confirmation. So, and so is Peter saying. Peter is saying, hear you. That means, I think. So thank you guys for the confirmation. In that case, let's begin with the webinar. First of all, let's have a look at the chart of Euro USD. And even before looking at the chart of Euro USD, I'll just very quickly go over and check what happened in our last discussion on the chart of Euro USD, right? Because as I said, all 5 setups discussed in the last webinar played out. So it's better to just show it off. It will just take a few seconds. By the way, if you guys are watching it, make sure you turn the video quality to 1080p. That is the optimum quality required to watch these recordings, because we are using dark backgrounds. So in the last webinar, the idea on Euro USD was that we were expecting the market will give a small correction and then follow an upward movement. And very, very important to note here, you can, by the way, check this last discussion as well. Very important thing was that I was considering this level. I should probably change the color. So yellow is the color on I'm using right now. So I was using this level 1.06989 as the level where the market is expected to reverse. What happened was the market really actually did reverse very near this level, and then it went down and achieved the target, making this trade analysis which worked out perfectly, right? So now let's look at the actual chart, and keep in mind the last webinar was done on 3rd of November 2023. Where is today's chart? Let's remove this thing. And there is today's chart, and there was the 3rd November chart, by the way. If I zoom into it, 3rd November, yeah, there it is. This was the pullback I was talking about. It was on a lower time frame chart, I believe. That's why it was looking much clearer. Or was it 1.069? Let me just very quickly check. Yeah, this was the pullback we were talking about. It was on a lower time frame chart earlier when we saw the recording from last webinar. So the market did pull back to our expected level, and then went up, and it did not go further than one up leg. We were expecting at least two or more up legs. Not at least two. We were expecting two or more up legs, but it did give us only one. But anyways, we were able to analyze this reversal level very early on in the group. I posted in Slack as well that from this point on, we have a strong resistance level, and we exited our positions there. Actually, I might be able to pull up, and the problem is that I will have to check where I set that. 6th November sometime. Let me just very quickly check and show you guys. Similar continuation, third, 6 November, bearish count. Yes, as you can see, here's the Slack post. I was able to analyze and figure out this level in real market situation. Let me just click on this chart. This was a important resistance level. And from this point, I have analyzed two hypotheses. One is a bearish hypothesis, which was suggesting that the market is going to reverse from 1.076, and the other one was a bullish, suggesting straight upward movement. But we had to wait for the upside resistance to be taken out. So I'm just pointing out that we were able to figure out this reversal beforehand, and the group members were already aware of these levels with detailed hypotheses in both directions, by the way, which we have been following for quite some time. Right, 1.076 is where the market stopped right before this. Right, this is 1.076 here. You can see on the right hand side. Okay, so it worked out perfectly. From there on, we were able to track the movements without any issues. So what is the analysis really, on this counter, right? So here I'll just like to clarify one thing that I am currently holding a sell position on euro. What happened to the webinar stream? Let me just quickly check. It looks like the webinar stream is loading up. Are you guys able to hear me fine? Because on my end, for some reason, the webinar stream is just rotating and not working out as it should. Hello, 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 hello. It is lagging for a reason. Here is just fine. So I'm not sure what's happening here. If you are guys are able to hear me fine, thank you, Peter, for letting me know. In that case, let's just continue. Right. So as I was saying, we were able to figure out this reversal level, right? And as a matter of fact, I am already short, as I just told you guys. So what am I really thinking? Why am I short? What's the analysis here? So let's have a look at it. Thank you, Sushil, for the confirmation as well. So what is really happening here is that I'm thinking that this market, from this point of reference, which is at the price level of 1.04465, and the time is around 3rd of October 2023. So from this point of reference, what I believe is this market is going up as an A, and then a ABC for a flat, and then it will go up for a C. So I'll just remove everything and I'll just show it over here in the charts. A down here, progressing as a flat, which will complete the B, and then it will be a C up. Now, what is this all this mumbo jumbo I'm talking about? This is basically Elliott Wave analysis, which is the most advanced form of price action analysis. And as per Elliott Wave, there are multiple different ways in the market can proceed. When it's in a trend, it's moving either as an impulse or a diagonal. When it's consolidating for the next leg, then it's called a corrective pattern. In this case, we are dealing with a corrective pattern. And more specifically, we are dealing with a zigzag correction, which should look like this, which I've drawn in the box on the top left. It is represented by a wave A going in the upward direction, followed by B in the downward direction, and C in the upward direction. Pretty simple if you look at it like that. But when you go to the real chart, what you will find here is that this wave is nowhere near that simple looking. Right now, what is happening here is actually, I think it's not an ABC flat. Sorry about that. It's not a. It would have been a flat if the B would have corrected to 90%. In this case, we will have to just mark it as WXY. Nothing much changes here. And it could still come down to 90 and become a flat. But I'll not delve into the technicalities. That will become a very lengthy discussion and sort of a class. So what really is happening here is the structure sort of remains the same. The wave W, if you magnify it, it will have three waves inside of it. First leg is called an wave A up, B down, and then C up. In this case, we already have an A up, a B down, a C up, right? So that completes your W. Similarly, wave X will have its own corrective structure. In this particular case, this wave X on the real price chart is looking like a flat correction, and a flat correction means that if you magnify this X, it should basically look like, I'll just use a different color here. It should look like this, right? Now you look at the real chart, it is exactly looking like this, like a sort of a reversed and mirrored and, right? So I'm just simplifying it for you to understand, right? And if we are correct, because we may be wrong, we never really know. The markets are dynamic, things are changing all the time. I might just close my position after this webinar, during this webinar, maybe, if I don't feel this analysis playing out, and maybe even reverse it, just telling you how trading really works, right? We form hypotheses, we see if the market is following those hypotheses. If it is following, we go along. As soon as we realize it's not working out, we take the losses and we leave, right? There is no commitment here. It's not a marriage. So, anyways, getting back to the analysis here, what I was talking about was that we are interested in this one, right? What's really happening is that this is a flat, and again, as you can see, flat will have a representation as an A, B, and C, a representation as an A, B, and C. All right. Now, interesting thing or important thing is that this C, if you magnify it, change the color. Yeah, it should look like this. Five waves in the downward direction. Wave one down, two up, three down, four up, and five down. Right. Now, that's what we wanted to discuss. So let's look at this and remove everything else. So what did I say? Five down, right? Like this, 1, 2, 3, 4, 5. We have the one complete here. I'll just use the actual chart. Yeah, there it is. The one is complete here. I'm assuming the two is complete here, and that is the reason I'm short, because the one is complete, two is complete. What is remaining, guys? Obviously, we know, we learned it very early on in our schools, kindergartens maybe, and it's called the three, and it's moving in the downward direction. So it should go like this, right? Then there will be a correction, and then there will be another leg down. So long story short, if the market behaves like this, then we are okay. We'll keep our shorts on. When will we not be okay, and when will we book a loss? If it takes out the high of wave two. Where is that coming out to be? It is coming out to be the price level of 1.07242. All right. Now keep in mind this level will vary differently based on the data feed you are using. I am using this data feed on the top. You can see here, right? So a little bit of difference is expected, but then again, you guys, if you trade, you already know what I'm talking about. So this is our stop currently. Let me check one more thing very quickly at my end. By the way, if you guys have any doubts or questions as per the analysis so far, just let me know in the live chat. Right. So yes, as I was saying, this is the expected progression. If it works out, we'll wait for it to work out by putting a stop at this level, which is mentioned here in this, let's say, yellow box. All right. And if it progresses down, we expect it to go down like this, something like this. Right. So downward targets we can look at now. I don't seem to be having any doubts or questions in the comments, so I'll just very quickly conclude it. Downward targets. Don't expect too much from it, because if this count is correct, then this is a counter trend move, and a counter trend move you do not want to hold for very long. So somewhere around 1.06267, we will start facing some support, seeing some support levels. So somewhere within this level, I will maybe book partial or maybe see the price action and decide. But as I said, don't wait for very big targets in a counter trend move. And from my understanding, where it can go to next 1.05881. I'm just referencing the last resistance zones. I can get more specific, but for that, I first need to see the break down here. Right. So that was all about this discussion. I don't seem to be having much to add here, and I haven't seen any doubt or questions. By the way, if you guys are clear on what I'm discussing, tapping in clear or understood or something of that sort will be nice and appreciated. I believe the YouTube algorithm will also like it, because that makes YouTube think that the audience is engaging. And after all, what's the bloody point of doing a public webinar? All right, so that's about that. And let's now leave this thing and head over to crude oil. Thank you, Sushil, for the confirmation, and Peter as well. Now let's head over to crude oil chart, which will be here. I'm following both of them. I'll just go with this one. It's simple, easier to explain actually. All right. Now, before we move with the crude oil chart, I'll just very quickly go over and show you what we discussed in the last webinar on crude oil, because crude oil is also one of the analysis which we did live, and it pretty much played out like picture perfectly. We had a lot of sell trades on crude oil. It was the biggest winner, I believe, in this week's trades, for me at least. So this is what we discussed on crude oil last time. Let me see if there's some more. Yeah, there it is. So the major idea was that we were expecting that this market will go lower. This was the main view, as you can see on the right. I'll just use the yellow color for explanation on the top of recording. By the way, if, in case you are not understanding what we are doing, I'm having a look at the 87th webinar's recording, which is the last webinar we did. In the last webinar, which is crude oil discussion, we discussed that this market is bound to go lower. Either it's continuing as a B wave, that it will go a little bit down and then a little bit up before taking the huge fall. That was the conservative views, and the aggressive view was that it can go straight down as well, right? And I was under the impression that this was a diagonal, which will be followed by some correction, and that correction could have completed here, or it could be just going sideways within this box range. Those were the two main views discussed. Long story short, it was a swing sell trade. Very clear swing sell trade this one was. And as it comes out, you can see that this is exactly what happened. Now, when we were doing the analysis, the market was at 82.47, and we discussed downside targets. Maybe I can just show it in the recording. Uh, I don't know where that is. There was definitely a line there. I'm pretty sure we discussed it. So, anyways, we'll just look at it on the real chart. So, this was the downside target. 1 second, let me just show you. 3rd November, the market was somewhere here, right? This was the downside target, 78.156. Let me just double confirm it. Yes, 78. So, guys, as I said, 78 was our downside target, right? Where the hell is 78 now? There it is. The market not only did go and achieve our target, it also surpassed it. Fun fact is, I was able to trade multiple shorts here and then some here as well, right? Lot of shorting on this counter, a lot of winning trades here. And as I said, my major part of the profits this week was from crude oil, I believe. Though I will have to check, but without checking, I can just guess. And this was the one of the bigger winners for us. Now, what is happening really here? There are multiple possibilities here, right? So that was about the past analysis. Now coming back to the analysis at hand, there are multiple possibilities how this market may be progressing, right? I don't want to dive into all of them. It will be very lengthy, but I'll just give you a rough idea of the major one or the important one. So if you take this analysis from this point of reference, which is the price level 95.505, we are having a leg down. This could be A or 1, sort of not really relevant at this point, and this could be the B or 2. But what I am taking here is I'm taking a different approach. I'm considering that maybe this is the B or 2. So what I'm really saying is that this is your first leg down and this is the correction. Again, as I said, this is not the main hypothesis. It does not have to be. I'm just getting to the point of the shorter time frame analysis. And if we go with this analysis, we go along with it, right? I know you all like to have some symmetry in your life and you want this to be the level, but just bear with me. Let's say this is the wave B. Then comes the important point, right? We are now looking at a zigzag, which is comprised of first leg down as an impulse or a diagonal, B wave up as a correction flat, zigzag flat, complex triangle, and then C leg down, which is going to be either a diagonal or an impulse. In this case, it's an impulse. And what I really mean by impulse is I'll draw a rough impulse over here. This C should look like this. Again, these are all Elliott Wave structures I'm just talking about. This is my field of mastery. As you know, I have a book, course, personal classes, everything around it. And I have done 8+ years of research on the subject matter. So yeah, coming back to the analysis, this impulse will have 1, 2, 3, 4, 5. You know how to count, right? Everybody knows, I believe, who's in this webinar at least. unless you've given your mobile device to a kid. Anyways, so this is your 1 down, 2 up, 3 down, and this is your 4 up for a correction. And now you will get the point why I'm taking this odd level. See, the point of analysis is not to be very hopeful, or I wouldn't even say hopeful. It should be called something like the point of analysis is not really to be very biased in a particular direction, right? So if I take any other analysis, if I take this makes it very biased to the downside, which I believe might be the case, by the way. One second, let me just check one thing. What's happening here? I'm not sure. It should have worked out, shouldn't it? One second, I have a technical issue here. Let me just fix it very quickly. Up. Yep, it's not gonna work out now then. Okay. And then where do we take it? On our transparency, on my top mast. There you go. Don't unlike to get annoying nonsense. All right, guys. So technical disasters averted. Then now getting back to our discussion, what I was saying was, oh, that messed up that. What I was saying was that we don't want to be very, very heavily biased in a particular direction. And to keep that bias out, what we really do is we look for the least or least conservative idea. So if this least conservative idea is correct, we will look for a wave 4 completion here, and after that we will look for the wave 5 down, because this is an impulse. This wave 4 is progressing as a possible flat, and there will be a 5 down afterwards. By the way, guys, let me know first before I proceed any further and conclude this analysis that you are clear so far. Just type in clear or something in the comments, and we'll take it from there. All right, there it is. It looks like comments are also lagging. Yeah, they are now appearing here. Thank you, Sushil, and thank you, Peter, for the clarifications. Now, what we are really discussing here is that if this really is a 4, then there will be a 5 down, right? We don't really care about alternates and whatnot. There are actually 3, 4 alternates for it. So nobody really cares about them. Or maybe people do. I'm just kidding. Those are definitely important. If we don't have the alternates, we can't reach this level. So anyways, the point is that if this is a wave 4, it can go to 38.2 retracement level, right? And this is the 38 dot retracement level line, which is coming at 78.324. So if the market is really inside a wave 4 currently, we do not want it to go higher than this level. Maybe it can go a little bit up, like a spike or something, and then come down. But we generally do not want the market to sustain above it. So this will be a marker to determine if this analysis is working or not, right? Always keep in mind things can change, analysis can be wrong, and doesn't matter if I had 80%, 90%, 100% accuracy last month, everything can fall to pieces in a second. If you think like everything should work out because it worked out last time. So anyways, long story short is we expect this market to do something like this, and that's why I have an open short position on crude oil as well, right, with stop loss a little bit above wave 4. We actually just adjusted the stop loss right before the webinar. Nothing much to discuss here, and we can figure out the targets for wave 5 down, but honestly, I don't see the point. What I'm really waiting for is to see some reversal either near wave 4 or before it. I mean, either near 78.324 or before it, and then might look to add more if the market continues down as we are expecting it to. And the completion point of this wave 4 will help us determine the targets for the downside. So I'm not going to comment, but you already know that the minimum downside target is 75.512, which is the last low. Right, nothing much to add here, and let's move on with this. It actually took a lot of time, right? Let's now head over to gold. Again, gold worked out as well. How about that? It looks like it's a trend now, right? Everything we discussed worked out actually, other than S&P. So gold, let me just very quickly check what we were discussing last time, because a lot of things have changed. I have some alternate counts here. So this was 3rd of November, was somewhere here, right? I'll just go and head over to the last recording and see what we were saying that time. Somewhere here, let's see. 7. Yes, this was the one main theme which we discussed. So there were two analyses. One was that we will be looking to go heavily long if the last high was taken out, whatever this was. And second was that if this wave one low is taken out, then this is an impulse heading in the downward direction for what you will call whatever you will call it, a flat sweep C, right? So where was that? 3rd November, somewhere here, somewhere here. Yeah, so actually what happened is it did go down. I have changed the counts a little bit, but yeah, the major idea played out. This was a correction. It was not able to take out the last high. So the long setup was obviously relegated. It did take out the low. So the short setup played and it did continue going down. All right. I was also able to capture some part of it, not major. I was majorly focused on crude oil, but yes, some trades I was able to take on gold as well. Now, what's with the update? Now, let's quickly head over and discuss the counts. I've changed a few things here. This is the alternate view I'm looking at. Right, I'm considering that perhaps this whole leg from this point of reference around the price level of 1810 is diagonal in the other direction, right? Not the best looking count, I know, but actually one thing I had to check here. I'll do it later on. Not the best looking count, I have to say, but it fits the guidelines are rather all right. So I just went ahead with it. So what we have is the first leg completing here and then a correction in the downward direction. Now, what I'm taking it now as is A, B, and C. Now, in this case, this is a flat correction. Now, in case you are not very familiar or unaware of what a really flat correction is, then I mean, I haven't I discussed that 5 times already, but who knows how you guys watch these webinars. You're gonna call this as an A. Maybe YouTube thinks I'm giving lectures for first grade students by calling things like A, B, C, and 1, 2, 3, 4, 5. I bet that's why they don't promote the channel. Just kidding. Yeah. Anyways, guys, before we proceed, make sure you share this content and not just like a silly share with someone who doesn't care in groups where people are interested in trading and listening to traders' opinions. Because YouTube hasn't really done a very good job of promoting our content. I mean, this is like the 88th webinar, and I am having this YouTube channel for 8+ years with all that accuracy and everything. But what do we get? 400 views, 500 views. This is just nonsense, right? So definitely share the content. That goes a long way and is very much required if you want to see this quality content. Just keep in mind, right? Now I do have a private audience in Slack as well. So if you want to keep this content, and I honestly want to keep continuing doing it as well, but we need to have something going on for it. So make sure you share the content. What I was saying was this is an A down, this is a B up and C down. So you know the story will count 5 waves and whatnot. And in this case, I don't really want to count anything here. I'm short on gold, by the way. Let me see what the position is doing. Not much. It's a very small position. So why am I short? I think this is a 5 legs downward movement. As you already know, we are currently in either the wave 4 or the wave 4 is complete, and this is near the end of wave 5. So now let me go on the actual chart and see what I'm really, or show what I'm really talking about. So I'm expecting that this market may continue a little bit sideways as a possible triangle, right? Now, this is a well-known fact. The triangles do have a tendency to give the wave B, which takes out the low so as to confuse the traders and then take their time, hit their stops, and then continue lower later on. So what I'm really talking about is that from this point, this market may propagate something like this, and then lower it goes. This will be called a possible triangle progression, because if you draw these trend lines, it looks like a triangle, obviously. Right now, the second possibility is this all already happened. This was the four, and this is just going down. This will be the last leg, and that's it. Right? We don't really have a way of knowing. I actually do have a way of knowing, but it goes outside the scope of these discussions. I'm not going to discuss my private research here. So, for the matter of these public webinars, we have two biases here. One is that it can go sideways and then down. Another one is it can go just down. All right. Now, I think I have worked out some possible targets. I had actually worked out these targets since a long time ago. This one is coming around 1933, right? But one thing to note here is if it just straight out falls down, I'm not hoping a very big move. It can still go down a lot, but 1933 is the possibility, very strong possibility, if the market goes sideways first like a triangle. All right. So that's about for my understanding on gold. We discussed the target and possible progressions. And one more thing I'll just like to quickly show you guys. We were able to actually figure out this. Did I not post anything in general? 1 second, let me check that. Oh, I never posted the webinar link that I'm going live. Yeah, sorry. So what I was showing was that I was able to predict this down like beforehand. Not only I was able to predict it, I actually did post it in the group. Where's the Slack group? Why is it not loading? But there it is. So this is a Slack group gold post. You can see where is it? There it is. Yesterday I posted it. Sustenance below, blah blah blah. My commentary, and this is the chart. Won't you call it? Nailed it. 1961. Look at that. And I projected the whole leg down, correction, and then down. And what do we have here? What do we have here, guys? I mean, for God's sake, use the comment section. Just kidding. So what do we have here is the reversal, literally right on point. All right. So I think you guys already know I don't need to exaggerate it too much. The Slack group is incredible, exceptional value. But then again, not everybody of you knew that I had a Slack group. I started after 6 years of just trading myself and with my students, of course. Yeah, but anyways, now it's open for public access in case you want to become a part. Where is that? Then you can send your inquiries because it is request only. So you'll have to send a request to get the details. You'll have to go to 50s.com/contact us and fill out this small form. And I'll get back to you. So yeah, that was about it for the Slack group, and that's all for the gold discussion. I don't have anything to add here. Now let's head over to S&P. Peter is saying, what high do you expect gold to hit today? Where is the comment thing? What high do you expect gold hit today? Oh, you mean if it reverses for wave C? No, that's the issue here. I don't want to, check that level out. But anyways, I can certainly look at some possibilities here. The reason is this is looking like a very strong downtrend, right? And in this very strong downtrend, I'm not really very interested in catching this counter trend move. If it happens, well, good for us. We'll add more shorts here, right? But I'm not very interested in figuring that out. But what you can, as a trader, do is, if you are really interested in that, is that's our trend line. Now, put an alert on this trend line. Once the market goes above it, look for a pullback. And once you see a pullback, we look for long trades. You can, if you are aggressive, you can enter the long trades here itself. If not, you can enter it at the break of the high. Right, go for the 1:1 levels, but not recommended. counter trend move, even 1:1 will not possibly work. It will go probably lesser than 1:1. So yeah, as I said, I don't want to comment too much on it, and I do know some ways to figure it out. Not some ways, some specific ways, but I cannot discuss them in the public webinars. But as such, as a trader, I'm not much interested in them either. All right, so makes sense. Peter says, well, good. In that case, let's now quickly head over to our chart of S&P. And again, guys, if you are joining in late and just watching the S&P chart right now, I'm requesting you guys, second time in this webinar, that please share the content afterwards. The webinar is complete in groups and places where you believe traders will be interested in looking at it, right? You're welcome, Peter, because we definitely need much more views, and who doesn't? I mean, so which one am I following on S&P? Not this one, of course. This one is a weird one. We had to update it. 1 second, what am I doing here? Long term is this one. Yes, that's a possible one for long term. So yes, I'm just going to discuss that on the shorter time frame. We don't have much time here. I have already put up almost all the time of this webinar on crude oil. I think we discussed it in way too much detail. So this is a bit of weird one. It sort of hit the stop loss yesterday for me. And what really happened was I was able to figure out this diagonal in live market. I posted it. And then I thought this will be just a ABC flat and then it will fly high, but it did not do any of that. It actually went up very deep. Now here's an issue now. First of all, let me just quickly explain what the count is. The count is that this is a wave 1 up and this is a wave 2 down. This is what we are expecting. Now the thing is that generally wave 2 can be deep, but in a flat being this fast is not really a characteristic trait of a wave 2. In general, obviously it can do whatever it wants. So I'm going to be a little bit cautious here, right? And aggressively I would have entered near the lows, but as I said, it does seem to be giving a sort of cautionary signs, symptoms, or whatever the proper word would be here, right? So as I said, we expect the market to go higher, but we do not have any confirmation for the reasons just discussed 2-3 times. So in this case, we would like to remain conservative, look for longs above 44.00. I do not have an alert for it, so I'll just place an alert near the highs. So that's what we'll do. We'll just wait for these highs to be taken out, and then I'll become interested in longs and probably trade some. And we can use this on the lounge downside place. So long story short, S&P, we do not have a confirmed trade or a clear trade. The count does seem to be working out, but it's not following the proper guidelines. So wait and watch on S&P. Nothing aggressive I want to do on it right now, and not really much to discuss here anyways either. So in that case, let's now head over to our next chart of Nifty 50, which will be followed by the chart of Bitcoin. One thing I forgot to mention in gold was, which I should have mentioned, which is also the title of this webinar. If this correction completes here as we are expecting, and this really is a 1 up and 2 down, then this upcoming leg is going to be super bullish, because it will break out the outside the high of the 3-year resistance zone, which we discussed last time. Just to give you a very quick idea. 3 something. 1 second. So yeah, as I was saying, this is the multi-year resistance, the 3-year resistance, which we are seeing. If this count works out that this is a 1 and this is a 2, no matter how deep it goes, right? Whenever this 2 is complete and the next leg starts, this will be a super strong move, right? Just keep in mind. And also another thing to keep in mind is, because this market has been seeing resistance at this price level for 3 years and actually 3 points, you must keep in mind that this pullback can be bigger than expected. We have our targets. We are thinking that this is in wave 5 and whatnot. But just keep in mind, it could be bigger than expected. It could become much more complex than expected. Why? Because look at this. Every time the market went here, what is this price level? 1980 something. So every time the market went near 1980, it saw sell off. It saw sell off. Yeah, it was able to sustain a little bit, but then look at this sell off. Look at this sell off. What is this? 1987 to 1900 almost. So almost 80 points. What is this? 2013 to 1935. More than 80 points. So you get the point, right? 80 points or more is the sell off within a single swing on this resistance levels. Yeah, just keep that in mind. With that out of the way, let's now head over to our next chart of Nifty 50. Again, one of the counts which worked out precisely as per analysis. And before going forward, I'll just like to quickly show what we discussed in the last webinar and how it played out. So there is the chart of Nifty will be somewhere ahead, right? There it is, Nifty. So there were two possibilities, both were suggesting upward movement. And the one was that it was having multiple gaps and possibly inside a strong impulse. Another one is that it's heading for a correction of wave B and then it will go up. So you get the idea. I've just shown you both of them by pausing the video. One was that this is going up impulse and another one was sideways and then up. So we were in both cases expecting upward movements, which is precisely as it happened. This is the fourth discussion or the fourth trade setup which we discussed publicly in a live webinar and it has played out. And by the way, keep in mind in the 86th webinar, we discussed 5 setups which played out in the 87th and the 87th we discussed and in the 88th, 5 again have played out. So consecutively, we have 10, literally 10 trades which have played out. Think about that. This is all for free. 10 trades have played out. What do you think of that? How many people have you seen doing it live publicly? Right? And if you like it, if you appreciate that, the amount of research and time that goes into putting out these analysis, I request you share this content very seriously with at least 5 of your connections and groups. Right? And now let's head back to our analysis here. We are suggesting wave 1 up, wave 2 down, and it looks like a progressing impulse in the other direction, which would mean that this market is likely to go either straight up or after sideways movement, it will go up. Now I'll just remove everything and just show you what I'm really talking about here. I'm really saying that this is a 1 up followed by a 2 down, and then we are expecting something like this, right? And this makes it a super bullish count, right? And the trade setup actually is at the break of 19463. We look for longs. So this is a very simplistic setup. You can say it can go sideways and all, but it's looking super strong. And the number of gaps here suggests this is part of a wave 3. Right. So expect extreme strength here if this analysis is correct. And strength or not, even if it's wrong, the break of 19463 does warrant a short-term long trade. Right. So that's about it for Nifty. Expecting upside movement. If we are correct, then extreme upside movement. Even if we are wrong, intraday wise, there will be upside movement. Right. What will be the targets and everything? Well, if it's a wave 3, we don't really need targets. It can just continue going higher and higher and higher. Short-term perspective, you can just take the wave 1 and then project the wave. I think I have not done it for many days. I mean, who checks these levels anyways? Just kidding. So yeah, immediate targets are 19635 and 19825. So you get the point. Target 1, let's say target 2. I'm not going to be precise here. I don't think it's required. As I said, it's a wave 3, so we expect things to be exceeded. So that's about it for our quick discussion on Nifty's 50, which again is a trade setup that worked out and a simplistic setup that I discussed. Lastly, we'll have a quick look at Bitcoin, which is also working precisely for us. And where is it? There it is. Oh, again, as usual, before heading over to the actual chart, where is this BTC? Let's quickly check what we discussed on Bitcoin in the last webinar and what happened in the current webinar. So in the last webinar on Bitcoin, which was discussed somewhere here, yeah, this is what we discussed. So the discussion was plain and simple. We are expecting sideways movement for wave 4. This double bracket wave 4, I'll just zoom into it, this one, and then upward movement. And I'm not sure if we discussed any targets for the upside. Yes, we definitely did discuss reversal levels 34150 and 33,000, but no targets. It did reverse from our 34150 level, very near it. Actually, I think it is the correct level. I generally tend to take rough levels. Yeah, this is it. It exactly reversed from our suggested level of last discussion. Not only that, I was able to figure out this upside, and this leg was also projected in our private Slack group. I don't want to pull up that we are almost near our 1 hour limit, and I like to keep the webinar lesser than 1 hour at least. So yes, as I was said, we were able to predict this upward movement as shown in the last webinar's recording, and I was able to track it in the Slack group. What the hell? Let me just quickly go over that and see if I can figure it out. Well, these are the posts on Slack. Where is that? Yeah, this is one of the posts, and then the next one, and then the updated count as a diagonal, which is what we are looking at right now. So around 36,600 was also a suggested long. So that was our discussion in Slack. Again, if you guys are not aware, you can request details for private Slack group access by heading to 50hours.com/contact us. Getting back to the point, I do expect this market to head up as a diagonal. So we are expecting a small correction maybe, and then another leg up, which should take out the last high of 38,000 level. I do not want to project any targets because if it's a diagonal, there's not much point because this market can then reverse at any point in time. So yes, if you are long, those are the targets, and stop loss is 36,200, 36,135. Sorry. So yes, that was all for this discussion. If you like the discussion, definitely hit the like button, and definitely share this, because as I said so many times in this webinar, we need to have more views because of the lot of efforts, and I mean I also want to grow my content here. So definitely your contribution and the reciprocation to these efforts is very much helpful for us. Nothing much to add here. Thank you for sticking till the end, and I'll see you guys in the next one.